Hello guys, welcome back to my YouTube channel. It's your boy FX Dollar Marine. So on today's episode on my YouTube channel, I would actually be talking on the do's and don'ts of structural liquidity. Well, this is personal to me to my strategy lands from DAX. So these are the do's and don'ts, and structural liquidity is a key factor in the algorithm, in the strategy we trade. So it also have the do's and don'ts. So firstly, on the do's and don'ts, basically, I just two actually, so don't think it's something that explains it. It's easy as it gets, guys. So, firstly, the structural liquidity should be well. How do I put it? Okay, let me show it on. Let me just show it with actually a trade. Okay, so this is a trade I took on GPP and ZD. So, this is my structural liquidity. So, your structural liquidity should be 50% below the 50% of your fee. So this is how it's done. You take your fee, you place it from the height of your transactional liquidity to your peak aspect, guys. To your peak aspect. Yes. So this is my peak. So you place it from transactional liquidity head to the peak. And then your structural liquidity should be below the 50% or very close to the 50% of your FIB2. So as you can see in this trade, this is where the structural liquidity was, guys. As you can see it right here. This is where it was located. So this is one of the criteria. So when we have, I'll still show chart examples of scenarios where the structural liquidity was above the 50% or was not even close to our POI and how the trade turns out. Now the second, but not the last, do and don't is the structural liquidity should be V or A shaped. Very important, guys. When I mean V or A shaped, it should be like this. Let me draw it out. It should be like this, or it should be like this. It should either be V shaped when you're buying or A shaped when you are selling, guys. Very key, very key. So if you can look at this now, you can see the structural liquidity here is V shaped. Is V shaped, guys. As you can see, all the liquidity here are V shaped. Then structural liquidity, which is the last low before the main low, is also V shaped. So that is the second do's and don'ts of the structural liquidity. Now, I would like to show a chart example of a trade that didn't have that the structural liquidity was far and what happened. Okay, so using my strategy here, guys, you can see this would be a sweep. This would be a sweep, right? And then this would be a break, a BOS, confirming that this is a transactional liquidity, right? Now, what's the next step? Our next step is identifying our structural liquidity. Now, from this point to this point, we can't see any structural liquidity. And the reason why I even measured my fee is because there was something I wanted to look like liquidity, which for beginners you might think this is a structural liquidity. But then why this is not considered a structural liquidity is because of this key factor of your structural liquidity should be 50% close, should be at the 50% or below the 50% of your FIB2, because this is where the money is, guys. This is where the money is. So your structural liquidity should be close to the money. If there's a lot of gap between your structural liquidity and where the money is, then you're likely wrong, identifying the wrong place as your structural liquidity. So as you can see in this setup, the structural liquidity was a little bit close to the 61 and I mentioned the 50%. So you see, that means it's far from the 50%, it's not close to 50%. So I would not take this setup. And then for those who are beginners who actually consider that their structural liquidity, let's see what happened to them in the future. As you can see, their stop loss got hit. You can see. So the fact that your structural liquidity was not identified here, you saw that it actually turns your POI or your protected point into liquidity, and it gets taken out, as you can see right here, guys. So that's that on structural liquidity, and that's also an example for inducement liquidity, like I promised in the last videos. In the last video, okay, let me show you guys another setup. This is setup on Euro AUD. As you can see, this is a sweep, right? After the sweep, you have your break, your BOS, and then this is the setup. Still playing out, was close to our SL, but hopefully it continues going our way as it has retraced. Let's see some other setups. Okay, this is a sell setup on Euro CHF, card CHF. Okay, it's also a sell setup on card CHF. Let me use this to also explain. So as you can see, this is the low, and then it gets swept. So the liquidity right here was swept, right? Now, clarifying that this was where our transactional liquidity is, because immediately swept it came and broke structure. So clearing the transactional liquidity, which was here. Now, what does that imply for us? It implies for us now to put our fib and then measure to the transactional liquidity, and measure to the transactional liquidity. And now you see, like I said, your structural liquidity should be close to your 50%, or at your 50, or below your 50%. So as you can see, this is close to my 50%. That's why I actually identified that as my structural liquidity. And the next thing is actually to set your sell limit, and then that's all. The next pay, okay, I have it set up on card JPY and USJPY. Yeah, so that is all for that, guys. See you guys in the next video. Thanks for watching. Don't forget to like, subscribe, comment, guys. Peace out.